outlook. So to start us off, we are back over the 47,000 handle. Now, would have been much higher if I had not hedged so much and lost on put option purchases, trying to catch and prevent myself from losing on the downside, and so it cost me on the upside. So as a result, I'm not actually that hedged right now, and the market continues the relief rally that we've been experiencing in this bear market, and it's quite the relief rally. And some people, like we're going to talk about later, are thinking that it might be topping off. So let's take a look at what I have done. If we go in the history, we have a couple of dividends coming in. Um, I had been trying to sell a call on the Russian market on RSX that didn't go through. Um, I have sold a call for Wheaton Precious Metals. I have over 200 shares, so I just sold the call for $25 for February 15th um, at $20 call for $25 credit. And this is me trying to work the trade. And then what else do we have? Um, we bought, oh, okay. I bought some leftover cash. I bought some emerging market bonds with the leftover cash. And I have also sold a $110 put for February 15th for one of my favorite products out there, the company that holds one of my favorite products, which is called Spotify. Now the current price is like 135, so this is way off the current price. And if it does drop down to 110, I wouldn't mind owning and working trades with this stock, especially because this stock is volatile AF. So it's a $275 credit, and as you might see later, I'm already winning on this trade a little bit, although I don't want to count my chickens too soon. This is just some leftover cash, and this is me selling the short-term treasuries and a little bit of emerging market treasuries to make that Spotify trade. It's a risky one, but it's much more income than if I were to just keep the money in short-term bonds or emerging bonds for that matter. All right, now let's take a look at some of the action in the portfolio here. We have Apple, EXK up top, EXK big disappointment. Now, if you guys recall, I thought that after a big bust in the market, there would be a pop in silver, but what this tells me is that there's more downside to go. This pop was not nearly big enough, and now that it's silver starting to roll back over, it might be a precursor to the market dropping. It could be acting as a leading indicator. If my theory, my hypothesis about major drivers of silver price is correct. So even though a big market downturn is coming, I don't think I'm going to be acting upon it as much. Maybe I'll purchase some insurance again, but it's bitten me in the ass a couple times already, and I just don't feel like wasting so much money. But it would be prudent to protect myself against some downside. However, I just keep on doing my option strategy, and hopefully it survives a big downturn better than the rest of the market. I don't know if I'm going to be become that defensive because it just keeps costing me money being so defensive. Um, just the insurance doesn't pay off. Okay, so this is EXK, a big downturn here. Unfortunately, my liability has increased quite a bit because of this. As you will see here, let's see, where's my, I have 12 contracts, I've sold 12 puts, and now my liability is $600. I'm negative $600 in this trade so far. I was hoping that it would get to 250 by January 18th, but it's already 17th and it's only at $2, and it's unlikely that this will happen. I'll be forced to purchase quite a bit of shares at 250, and I'll be holding on to them. I may sell a call against them to try to break even, just like I did with that company Switch that didn't work out. But This is EXK, it's a different story. I know this company, I don't know Switch. So I'm going to be trying to do that and see if I can actually make my money back. And if there is a big silver boom, I'll make up for it by ways of wheat precious metals by a little bit. Hopefully it counteracts any kind of downside in the market, although those are not perfect hedges, the market and silver. Okay, now that's EXK. Let's move on to the big topic, Apple. This little spike over here is on fake rumors that some kind of trade tensions being eased between China and the US. So that's why you see the spike over here. The big play here on Apple is that I've sold a call for a $165 call, and so far I'm losing on the trade because it keeps going up, but I'm okay with that. If it reaches 165 and it sells at 165, I'm totally okay with collecting all that profit by February 15th. So February 15th is going to be a big day for me, just like January 18th. Tomorrow is a big day for me as well, the closing price. So, but so far, I'm getting some appreciation from Apple against the, um, losing money on my call option trade. But I'm okay with that because as you can see, the amount is much bigger here. So plus 106 minus 16. And if it does reach over 165, I'll still be collecting this premium on top of the proceeds from the trade, even though I may be missing out on any kind of upside from there, which that's totally fine. I will have made some money, and I'll be looking for better opportunities. That's Apple, and then let's see the Spotify trade, which is already paying off because it's a sell of a put and not a sell of a call. So if the price goes up, I end up decreasing my liability. As you can see over here, it's 203, and it started at 275, minus 275. Now only minus 203, so I'm winning on this trade as well. All right. Another thing I'm looking forward to is the release of the collateral from. Let's go back to the from the Realty Income company here, symbol O. I'm looking forward to the release of the collateral here. It's $6,000 worth of collateral because I saw the put option, and so far it looks like to be a very, very winning trade. I've got a $40 credit, and right now it's worth $3. So tomorrow it will expire worthless, barring any kind of insanely crazy crash in the market. So I'll be collecting that, and that's good news because then I have 6,000 more dollars to play with, and hopefully I do something that lasts until February 15th, so I can get all that cash at once and I can re-roll it into better trades for more money. And I do have an incentive now, as you know, because I have $30,000 that I'm playing with from Robinhood, so I need to basically make more than $125 through my options play per month in order for this to be worth it. All right, this is a quick overview on the account. This is so far $53,000 worth of market value, but of course, some of it is with borrowed money. My account value is $47,000. All right, these are the biggest appreciations when it comes to holding so far. Wheat and precious metal up top, C-SPAN both almost around $500. Energy fuels around 374. SIG, that was deleted. I've already made that trade and collected that profit. And then we have, the Realty Income company there, Cameco, which I've just sold a little bit at $12. I've sold at $12 because I sold a call, if you remember, and it executed. Right here's the proceeds. I got assigned to sell 100 shares of Chemical at $12, and I collected the money here. And which is, it's proving to be a good move so far since immediately it dipped over 1183, and I can perhaps sell a put to regain that position at around $11. And that's a strategy, is just being able to read the market well. Obviously there's some calculation going in there, but being able to read the market well and take advantage of this slow, flat moving type of market, and hopefully I make money that way. So far, it's been doing great. I'm really pleased with my progress since I started this strategy. It's been working out really well for me, even through this moment here where it looked like all was doomed. Doing pretty well for the year so far. Here's the all time. I started the strategy probably somewhere around here, July, I think July 1st maybe, or June 1st, one or the other. Um, If we look at the yearly performance, up 5.29%. Let's do a quick comparison to the SPY, minus 4%. So doing 9% better than the market thus far. That's including fees. All right. Now, market outlook. I've been listening to a lot of shows, a lot of podcasts, all these, sophisticated investors that have brains that are much larger than mine, and what they're seeing is this really, really, really big resistance zone coming up ahead that's going to be basically from here, from 263 to, these topping out patterns, 279. So we're just entering it right now, this resistance zone, and they're thinking there's going to be at least a very mild correction here on this upward move of the S&P. Well, all the markets, all three of them, Dow and Nasdaq, they usually travel pretty much together, except at a different one of them's more volatile than the other. So the S&P being the steadiest one, it involves the most amount of companies, and tech is wild and has less companies, and Dow Jones even has less companies, even though they're all blue chip companies, and they're the biggest, not necessarily the biggest, but biggest and most representative, more stable, most blue chip. All right, so this is what people are seeing as a trend. Some people are drawing lines through here, trying to point out the resistance zone. Some people are drawing lines horizontally through here. From a technical perspective, I'm not that good. I'm not very good at technicals. I know the basics, but um, there's also people discussing um, sentiment, and they're bringing out sentiment arguments. People are bringing geopolitical arguments. People are saying how China is worse off than originally predicted, um, even worse than is understood now. And so um, people are coming at it from all kinds of directions, and I haven't really heard anyone basically say, "Oh, this is going to go up from here." It's pretty much a consensus, the mainstream and the underground community, that this market's going to roll down. Now, if this happens here, this will probably be, outside of this downturn, will be the most predicted downturn that I've ever been aware of. And so far, the consensus, major consensus, it could be a self-fulfilling prophecy, but is that this downturn would happen, and now there's going to be another one, at least a small one, here coming up in the next week or two. So look out for that. I don't know if I'll be buying any protection against it. I might ride it out, but I will definitely update you and make another episode to let you know. I'm just happy. Oh, look, my count's even going up as we're talking. This is great. Um, this might be a new intraday record over here for the account. So we'll see how it plays out. I'm very curious. I'm going to keep doing my options things. So you saw the biggest trades that I have running right now. Make sure that you don't make all of your investment decisions based on this video. Make sure that you do your own research and so forth. So yeah, that's what I wanted to share. Hopefully I'll make another video pretty soon. Maybe tomorrow if something interesting happens. If not, next week for sure, 100%.